be fairly comfortable about the retail profile in Asia right now. And let me just explain a bit further why. We developed a retail sentiment barometer last year where we can measure empirically what the degree of speculation is in the different markets, and we can roll it all together into an aggregate regional barometer. To quantify things, in the middle of last year, that reached fairly elevated levels of about 1.4 standard deviations above its longer term mean, which was an indication that markets were kind of hot and there's a lot of speculation taking place. That's since backed off to about the average level right now. So, in aggregate, we don't see empirical signs that markets are overly speculative. If you unpack that, in Korea, we're seeing a bit more signs of heat, and onshore in the A shares, we're seeing a similar sign, but nothing that is as excessive as, for example, we saw in 2015 when the A shares reached a really very, very considerable speculative excess. The other quick point that I would make is that typically there's this derisive view on retail, notably from institutional investors, that they're always late and it's sort of the dumb money. In actual fact, if you look at things last year, retail were the smart players. They were buying back and getting into markets in the middle of last year and clearly enjoyed very significant gains, particularly in Korea, as I mentioned, whereas foreign investors have actually been slow to fully recover. I'll just give you one statistic here. If you look at the emerging Asian markets, from the peak last year in January to the lows in May, foreigners net sold about $62 billion on the exchanges of emerging Asia. Since then, they've rebought only about 40+% of that, about 28 billion. So they've not even fully reloaded what they sold last year, whereas retail have actually been earlier in replenishing their positions. So right now, in terms of who empirically has been earlier and better at the market, actually retail is looking pretty good.